Welcome to this video. If this is your first time, kindly subscribe, like and share. In this video, I'm going to be talking about my strategy, my Forex trading strategy. My strategy. Okay, the first thing I'm going to be talking about is trade based on market structure. Then price action. Then the last one is liquidity. In this first one, market structure, I trade based on market structure, pullbacks. So this is how my strategy is. In a bullish trend, the pullback is always coming downwards. This is a pullback here. This is another pullback. So I'll be looking for my entries in this zone here. This zone here, also a zone here. So in a bullish trend, I'll be looking for sales. While in a bearish trend, I'll be looking for buys because the pullback is going up. This is a pullback, is going upwards. This is a pullback, there's another pullback here. So this is why I'll be looking for my buy position in a bearish trend. Okay, so it's very simple. When price breaks structure, a bullish trend or a bearish trend, once price breaks structure, then I'll wait for my confluence to see a market structure shift or a change of character in a lower time frame. That's for the pullback. Once I get a change of character, then I'll use my Fibonacci retracement tool to mark out the zone I'll be expecting price to come into before I take my entry. Let me explain what I just said. For example, let me take out this. For example, this is a bullish move. This is a bullish move, and let's say it's on the 4 hour. This 4 hour time frame. Okay, so when price gets to this zone here, what I'll be looking for here in a lower time frame is this, something like this. The sweep of liquidity. This is the liquidity, the last higher high, sweep of the liquidity, then a break of structure. This is the last low. Price will break this low, and price will retrace somewhere in this zone before continuing downwards. That's to get this pullback. If I don't see this, I'm not taking a trade. It's part of my trading plan. If I don't see something like this, This is a liquidity sweep. This is the break of structure. Then this is the retracement. I will use my Fibonacci retracement to mark. Sorry, I use my Fib to mark out this. Then inside here is my point of interest where I'll be waiting for price to come into before I take a position. Same thing goes for the buy. So in a bearish trend, I'm going to be buying. If this is a bearish trend, I'll be looking for entries on this zone here. Buy entries. It's just a pullback, so I don't need to hold the trade for long. Though sometimes it usually moves slow. When it's fast is when price is planning to break, to change direction on the higher time frame. Let's say it has been going bearish on the 4-hour time frame. Then price now decides to break structure and then starts going upward. On the higher time frame, that's when price will tend to move faster. Okay, so going back to my example on the bearish trend. So there will be a break of structure to the downside. Sorry. A break of structure. So I'll be looking for my first confluence is break of structure. And I'll be waiting for market structure shift on a lower time frame. So if this is the 4-hour time frame, this 4-hour time frame, then I'll head over to a lower time frame, maybe the 1 hour or the 15 minutes. What I'll be looking for is this sweep of liquidity. This is the liquidity here. This is the liquidity, sweep of liquidity, break of structure. Then price will retrace somewhere in this zone before continuing. It's just a pullback. So my risk to reward is usually 1:2 or 1:3. What I normally do is I scale up when I see a setup. If let's say price does this break of structure, then retraces and start moving. If I enter somewhere here, price moves, gets to somewhere, retraces back, I take another position. If it moves, gets somewhere, retraces back, I take another position, waiting for price to get to my take profit. Once it gets to my take profit, I close all the trades. That's how I scale up in a single position, in a single setup. Okay, so that's it. I'll give an example, a chart example. Okay, so this is AUD card, AUD CAD. Let me give an example. This is the 4-hour time frame. Here is a break of structure to the upside, so I'll be looking for sales. This is my strategy. I follow the trend. It's just that I trade the pullbacks. So I'm looking for sales on the lower time frame. I'll head over to the 1-hour time frame. So this is my sweep of liquidity on the lower time frame. That's the 1 hour. This is the break of structure. And I'll mark out my Fibonacci extension to Price got into this zone. I did not take this trade because I was expecting price to get into somewhere here, somewhere here, but price didn't get to that zone, so I left the trade to just play out. Let me look for another example, another chart example, like this one here. This is a 4 hour sweep, 4 hour break of structure. Then on the 1 hour, there was no confluence here. There was no sweep of liquidity, break of structure, or anything for me to enter. That's why I left this trade. It's working for me. I backtested it for months. Okay, let me head over to the 4 hour time frame and look for another one. Okay, look at this. This is a break of structure to the downside. I'll be looking for buys on the 1 hour time frame. Head over to the 1 hour time frame. So this is it. On the 1 hour time frame, what am I looking for? Sweep of liquidity, break of structure, and then I'll mark out my Fibonacci extension too. Very simple. So price go to this zone, take my buys, and then target, go to the 15 minutes. I do take my entry on the 15 minutes. Take my entry on the 15 minutes time frame. So once I say consolidation on these 15 minutes, I'll assume that price wants to go in my direction. Not that it will go, I'll assume before I take the trade. If I see this consolidation, then I'll enter. Set my stop loss here. One is to three. So now I've gotten this trade. How do I scale up? Once price moves, I get this retracement here. I'll enter maybe somewhere here. Somewhere here. Set my stop loss. I'll set my stop loss in my entry. And then I'll still target my take profit. So price moves, get this other consolidation here. I take another buy. Set my stop loss here. Target here. As you can see, price has not gotten to this TP until here. So I can also take trades here. Price came down here, went up, came down. So the price did not break this low. I can also take a trade here. Target here. And still target my TP. So that's how I scale up. in a single trade. Let's look for another example. Head over to the 4 hour time frame. Let me use another currency pair. Here's the CHF. For example, this is a 4 hour break of structure. And on the 1 hour, we'll be looking for buy for the retracement. If you look at this close, there's a ship of liquidity here. Then here's a break of structure. Then I'll mark my Fibonacci. So as you can see, then on the 15-minute time frame, I'll take my entry. The 15-minute time frame, I'll take my entry. Price came down here first of all. Came here. So I'll take my first entry here. Somewhere here. Target here as my stop loss. Take profits. Target this high. So price came down here. And this is a weak rejection. Confirmation. My next video will be talking about confirmation. Maybe candlestick confirmation or pattern, but just confirmation. So this is a weak rejection. I'll take another trade here. Another buy here. My stop loss will be here also. Target here. I'll also take another buy here after this rejection. This is a weak rejection. But I don't like taking trade in that same entry. So if I take another buy here, I'll take another buy here. I'll take another buy here. And there's another one here. So that's how I scale up. Instead of risking everything on one particular position, I calculate it and divide it. I risk it one by one. Okay, so that's all for this video. If you like this video, click on the like button and don't forget to subscribe. See you in the next video. If there is any confusion, comment it in the comment section. Subscribe. Thank you.